Hey, this is Coach JR, and today, before the market opens, or if the market opens by the time my publisher publishes the video, I just want to give you an overview of the indexes, and we're going to do that with very popular investment vehicles that are going to be the ETF, Exchange Traded Fund. They get 1,000 of shares traded, but the most important that they can give you some guidance how you can position yourself in different companies. If the indexes via the ETF, we're going to take a look at SPY, the Qs, QQQ, that's for the Nasdaq. And of course, still lagging, but wait for it, it's coming. We're going to talk about the Russell 2000 and the ETF IWM. Now remember, it's about positioning yourself and understanding that we are in the bull market. Don't let any anchor, any host at CNBC tell you something different. Stop listening to Jim Cramer. He is just losing it sometimes. We are in a bull market and we need to play correctly. Don't call it meme stop, just call it an opportunistic play. That's why they are. So today, before we jump into all this story of meme stocks that they're not really meme, they're actually metric stocks. And you need to learn about metrics. And I will talk about metrics in a future video, my second video for the day today. So now let's jump to the charts and let's take a look at what's happening and the levels that I think you must pay attention if you're trading for a living, all right? Let's take a look. Let me just minimize this one here and let's begin. So right now I have the three indexes via the ETF. This is the best way for any retail trader or anyone that is a non-trader that wants to understand more about trading indexes in the US. So usually what you do is that you just buy the index, you put that on your 401k, your IRA Roth, or any investment plan that you have, and you look for passive. That means that you do believe that the US stock market, I mean, pretty much, you have different versions of it since 1800, or you actually think about the time where the SPY was created. That was, I think, 1993, 1994. And it has been generating up to 800% in about 32 years. So that's a good return in the long-term view. And that's why a lot of these indexes are reflected via the ETF, because they give you this notion that most financial advisors, most traders, most investors will never beat the index. And yeah, that's kind of thing, but it's not 100% accurate, right? So it's September, and a lot of people are now talking about the Jewish festivities and the 10 days of praying, all good. So if I were to be looking for a position, which I am, in a continuation of a current bullish trend, this is what I want to do. First, let's take a look at SPY. I'm looking at a 2-hour chart. I'm going to do apples to apples. So this is the daily chart. Now, this pullback, we have this pullback from August 19, and then you have another pullback, another red day that was minus 0.59. If I were to judge this level, I will just take a trend Fibonacci. Very simple. It's not only on TradingView, also TradeStation, any chart system that you may have. It will have a Fibonacci retracement. Just use it. It's very simple. A lot of my colleagues, they like to laugh about it, but hey, listen, they're just mathematical figures. It's better to trade with a plan than to trade without no plan, all right? So look, from this pullback to the high that we know so far, 454, then I get a few levels. If I were to expect a pullback, not very aggressive, all right? Not very aggressive, because what's happening is a lot of traders in institutional desks, they are hedged. So there's a lot of protection that they didn't have at the beginning of January 2020. This is the awful truth. Everyone is expecting a minus 15, minus 20% correction. When you see all those headlines in the Financial Times, CNBC, New York Times, hey, guaranteed it may not happen, okay? So the reality is that if we have a little bit of another pullback in this area, I will look to start bullish positions, start buying more of this ETF at 78.60% of Fibonacci, around 447. And I would love that to happen, okay? So that's the first case. Second case, I want you also to remember everyone that is trading financial markets, trading. And if you're an investor, what I'm about to explain will give you an idea where you need to load with a lot of money. And we need to find liquidity nuts. That means that this area between 443 and 445, that's a huge area. It's very wide as far as liquidity goes. So therefore, if I were to draw a liquidity level that is very important for investors, not so much for traders, this will be an opportunity for everyone to load the boat because that's an area of value. And we find this on the daily chart, right? That's number one. That's the SPY. Now, second, the Qs. Every time there's this discussion about the Federal Reserve talking about increasing rates, which is not the case. They are talking about tapering. Two different animals. But people tend to confuse. Tapering, take out, a little bit more like dry liquidity from the markets, all right? Hiking rates, that's a different story. And as long as that is not the case, you will have the Qs just flying high. That's just the way it is. The way I look at it in the same way I did with SPY, I take the trend Fibonacci, this time from this point, again, and let me just zoom this a little bit so we can all see it. There you go, perfect. Now, see that there's a little bit more strength in this one. We had a pullback to the 29.50%, and here I'm gonna pause and coach you a little bit more. In the US, a lot of New York traders, they use the 29.50 and the 78.60. 29.5, that means when the market is very beat, that means as is happening, a lot of people are buying. Every single retracement, you see everyone buying, and sometimes you don't have time. That's because the market is way bid. They're bidding the market. They're pushing it higher. So the pullbacks are going to be very limited, very compact, okay? Now, when you have a deep retracement, the last 10 for bulls will be the 78.6. In Europe, they use a lot the 61.8, and that's fine. But you can use both, and you can have now an idea what happens and why you see the Qs just making a swift pullback to the 29.5% in Fibonacci. Now, if there's a breakout, we need a breakout at this level, 382, then if that's the case, you have to prepare. You take price range, you're going to measure. Just measure and get a figure. You need to have a figure. And that figure will give you $10. That's about 10 points. And then you project those 10 points from that 29.5. And that gives you a bullish leg that you can study and you can trade. So in this case, we may expect if there's a breakout during September, the Qs may surprise and have a positive month, a little bit stronger than the SPY. That means a little bit more technology can be a little bit stronger than the general market, all right? And that will take you to 389. So you can look for weekly calls aiming or targeting 389. So next week, probably you want to be a buyer for the weekly and see if you can buy the 389 or the 392 or 395 call. That's my suggestion as a coach. So you can have a little bit of guidance, okay? Now, you can see everything is different. Now, let's just have apples to apples. And what is a point that I would really see for investors to come back? Now, there's a difference because this was it was not as big, just the market just opened. So the liquidity in this area is different from the SPY, and it's pretty limited, okay? But still, that will be my level, 372, all right? So you have that there. Now, let's take a look at the Russell. Not looking good, honestly. It's not looking good. This actually, I may think it will have one more push to the downside, depending how it behaves today. Let me just show you this right there. So it looks like it may break to the downside. Look for 224 and then 222, which is the 38.2% of Fibonacci, all right? I'm going to bet that it may have to come back to this area between the 220 level and the 218. Ideally, I don't mind to retest 61.8% of Fibonacci. This is on the daily chart. All the time frames that we're studying right now, my levels are based on the daily chart. Remember that. Why? This is a complex index right now. It's being on the downtrend, not so much as a downtrend, but it's being lagging compared to the big indexes. That's the thing. A lot of retail traders and everyone also in Spain, in Europe, they do trade. They do trade small caps. That's where they look for the big bang, explosive returns, right? And mega caps like Facebook, Microsoft, Apple, Intel, those are the plays that you have sort of for your retirement accounts. You have to keep that in mind. In this case, again, I repeat, I'm not surprised. I don't mind. Ideally, I want the Russell via the ETF, IWM, to retrace. Why not? 61.8, and I will prefer to see it go back and trade at 78.60. Clean all those shorts, bring more liquidity, and then get ready for a big stampede of money, because a lot of hedge funds, they're not performing this year. So I will prefer, again, ideally this level, prefer this area. And then you go and do the projection from the log. This is the log from August 19. Take your level, that's almost 20 points. And I will say, if that's the case, you can see this whole thing going up 20 points. It will take us to, there you go, 237. And these 237, let me take a quick look at this story. And finally, if we get to this level, see what happened on the IWM. This is just, remember, a replica of what is the Russell 2000 index doing. Then we have a breakout, and that's when the party starts. You want to be ready for this. Now you have it, okay? Now you have it. On this one, I won't find any liquidity level because I prefer just a deep retracement, another deep pullback, at least in the short term, that's a deep pullback. And then I'm looking for finally a breakout, because we have 1, 2, 3, 4, 5, 6, 7, that will be 8. 8 times. 8 times. I've been trying to do this. So that would be the perfect moment, okay? That would be the perfect moment. So there you go. You have all the levels, my levels for the 3 most important ETF that I think anyone that is looking to make a living out of trading should be paying attention. At the same time, when it comes to long-term ideas for your 401k, your either Roth or your individual retirement account, remember, I have a service. It's called the Profit Flow Group. So in the description of this video, there's a link, okay? Let me just go back to the 3 of them. There you go. On the description of this video, there's a link. Now, my service, rather than just do what most of my colleagues do in the US, like, oh, they have another idea and they're going to sell you a new service, I just wanted to pack everything. I grew with the likes of Porter Stansberry, Rob Booker, Whitney Tilson. And one thing I learned from all of them is that you want to give your best to your members and you want to build a strong community. And that's what I want to do as a performance coach when it comes to trading and investments. And within the Profit Flow Group, you get three pieces of research. You get my core idea, which is SDF, Statistical Disruptive Flow, where I study options and look to find explosive opportunities like I did on AMD, which was a 700% return in about 3-4 months. And then also with Clover Health, ticker CLOV. Again, ticker CLOV, which I found a 10x in less than 24 hours. But what I do is more than that. I give you everything I have as far as research. So we have under the radar, when I found these equities with opportunities for you to double your money and all the way to 10 times your money in equities. How about that? And finally, for those of you that are looking into retirement, I pack all my ideas into the best ETFs for you to have in this decade, 2020 to 2030. So waste no time. I know you like this level. I know you're looking to develop an extra income from trading. So this is the first stop that you should do every day. Look at what Coach AR has to offer to you as far as levels, price rotation, trend Fibonacci, and different ideas that will make you a better trader and a better investor. So remember, click on the link in the description of this video. The broadcast, it's free. That's right, it's free. It won't bite you, but take a time, listen to the whole story, and you will know exactly why I trade the way I trade and why I do what I do, all right? So I see you in the next video. The markets are open. There's so much to do. Take care. And until then, whoosh!